Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host, and today we're exploring an expert advisor called Vortex Trend Shift. This strategy is built around the Vortex Indicator, a directional momentum tool that measures the push and pull between upward and downward price pressure. Over the next few minutes, you'll learn how it aims to spot the start of a trend, how it filters out noise, and how it manages risk with a volatility-based bracket. Everything here is educational information only, so let's dig into how Vortex Trend Shift actually thinks. Let's start with the big picture. Vortex Trend Shift is a trend-following momentum expert advisor for MetaTrader 5. Its engine is the Vortex Indicator, developed by Etienne Boats and Douglas Seatman. Unlike a simple moving average crossover, which tends to lag behind price, the Vortex Indicator is designed to capture the beginning of a directional leg. It does this by measuring two opposing rotational pressures inside a window of bars. One line, called 6+, tracks upward movement. The other, called 6-, tracks downward movement. Both are normalized by the true range, which means the indicator is scale-free and behaves consistently across different symbols and time frames. When 6+ climbs above 6-, the market is being pulled upward. When 6- takes the lead, downward pressure is in control. On its own, though, a raw crossover can whipsaw during choppy, sideways conditions. To address that, this strategy layers two more conditions on top of the crossover before it will consider a trade. The dominant line must show genuine strength, and price must agree with a longer-term exponential moving average. This trend filter keeps the strategy trading with the broader backdrop rather than against it. Risk is handled with a volatility-based bracket. Both the stop-loss and the take-profit are sized from the average true range, so the protective distances automatically adapt to how active the instrument is. A calm market produces a tighter bracket, while a more active market produces a wider one, without any hard-coded point values. Who is this style suited to? Educationally speaking, it leans toward traders who are interested in systematic, trend-following approaches on markets that tend to move in sustained legs, such as major foreign exchange pairs or metals on the 1-hour chart. As always, this is educational information only, not financial advice. Now let's walk through the exact logic, step by step. The expert advisor works on closed bars only. Once a new bar opens, it looks back at the bar that just finished and runs its calculations on confirmed data. This is an intentional design choice, because it means the signals are based on settled prices and are not meant to repaint or change after the fact. First, the strategy computes the Vortex Indicator over the look-back period, which defaults to 14 bars. It calculates 6+ and 6- for the just closed bar and for the bar before it. By comparing the two, it can detect a crossover. A bullish cross is when 6+ moves from at or below 6- to above it. A bearish cross is the mirror image, when 6- moves above 6+. But a crossover alone is not enough. This is where the triple gate comes in. For a long setup, three conditions must all agree. 1. 6+ must cross above 6- on the just closed bar. 2. That newly dominant 6+ line must be at or above the strength threshold, which defaults to 1.00. A reading above 1 signals genuine directional pressure rather than a flat market brush. 3. The closing price must be above the trend filter, an exponential moving average that defaults to 50 bars. Only when all three line up does the strategy signal along. The short side is the exact opposite. 6- must cross above 6+. That line must clear the strength threshold, and price must close below the moving average. When those three agree, the strategy signals a short. Now for the exits. Every position carries a volatility-based bracket. The stop-loss is placed at the stop multiple times the average true range, defaulting to 2 times ATR. The take-profit is placed at the profit multiple times ATR, defaulting to 3 times ATR. That gives a reward-to-risk shape of 3 to 2 by default. On top of that, there is an early exit rule. If an opposing confirmed cross appears while a trade is open, the strategy reads that as momentum flipping and closes the position early, rather than waiting for the bracket. The expert advisor holds just one position at a time, and the freed slot rearms on the next bar. Remember, trading always involves risk, and losses are a normal part of any strategy. Let's look at the actual MetaQuotes language code the way you'd see it inside MetaEditor. At the top are the input parameters, and these mirror the settings you can adjust in the strategy tester. VortexPeriod sets the lookback for the two vortex lines and defaults to 14. ATR period, also 14 by default, sizes the stop and target bracket. Trend EMA period, defaulting to 50, controls the trend filter. Strength threshold defaults to 1.00, and the two multipliers, StopATR multiple and TakeProfitATR multiple, default to 2 and 3. Now look at the long block. The condition reads, if bull cross, and the current 6+ is at or above the strength threshold, and trend up is true. When all three are satisfied, the code reads the ask price as the entry. It then sets the stop loss at the entry minus the stop multiple times ATR, and the take profit at the entry plus the profit multiple times ATR. Finally, it calls trade.buy with the lot size and those protective levels attached. The short block is a direct mirror. The condition checks for a bear cross, that 6- is at or above the strength threshold, and that trend down is true. Here the entry is the bid price. The stop loss sits above the entry, at entry plus the stop multiple times ATR, and the take profit sits below, at entry minus the profit multiple times ATR. Then it calls trade.sell with the same bracket logic. Notice how both sides use the same average true range value. So the protective distances scale with current volatility on either side of the market. Let's bring the logic to life on this illustrative chart. Along the bottom, in the subpanel, you can see the two vortex lines. The green line is 6+, tracking upward pressure, and the red line is 6-, tracking downward pressure. The dashed level across the middle marks the strength threshold at 1.00. On the price chart itself, the smooth curve running through the candles is the 50-period exponential moving average, our trend filter. Watch how the crossovers in the subpanel line up with the entries above. Look at the opening candles on the left. Price is drifting lower, printing a series of red candles into a fresh low. During this stretch, 6- is sitting on top, above 6+, which tells us downward pressure has been in control. Price is also trading below the moving average, so there is no long setup yet. Then the market steadies and turns. As the candle at the bottom of the dip closes and the next candle pushes up, two things happen together. In the subpanel, 6+ climbs and crosses above 6-, and it pushes above the 1.00 strength level, confirming genuine upward pressure rather than a flat market. At the same time, price closes back above the moving average. All three conditions now agree, and you can see the buy entry marker appear on the chart. This is the long setup completing. From there, follow the candles upward. The expert advisor has placed its stop loss below the entry, at 2 times the average true range, and its take profit above, at 3 times ATR, giving that 3-to-2 reward to risk shape. Candle by candle, buyers stay in control. 6+ stays elevated above 6-, price rides above the moving average, and the green candles carry price up to the take profit target, where the long is closed for an illustrative gain. Notice the strategy never traded against the trend. It simply followed the pressure the vortex lines were showing. Now watch the right side of the chart, where the picture flips. Price puts in a peak and stalls. The next candles turn lower and start to break down through the moving average. In the subpanel, 6- rises sharply and crosses above 6+, clearing the 1.00 strength level on the way. And as those candles close, price is now trading below the moving average. Once again, all three conditions agree, this time on the short side, and the sell entry marker appears. For this short, the bracket is mirrored. The stop loss sits above the entry at 2 times ATR, and the take profit sits below at 3 times ATR. Follow the candles down. 6- stays dominant above 6+, price stays under the moving average, and the red candles push lower until price reaches the take profit target and the short is closed in this illustration. Two things are worth calling out as you watch this sequence. First, the crossover in the subpanel is only acted on when it happens on a fully closed bar, which is why every entry lines up with a completed candle, not a flickering one. Second, if an opposing cross had appeared while either trade was still open, the strategy would have read that as momentum flipping and closed the position early, before the bracket was reached. That early exit is a core part of how it manages a trade. So across this whole illustration, you can see the rhythm of the strategy. It waits for the vortex lines to cross, confirms real strength above the threshold, checks that price agrees with the trend filter, and then lets the volatility-based bracket manage the outcome. This is a simplified, educational illustration, of course, and real markets are far messier, with losing trades along the way. Trading always carries risk. That brings us to the end of our breakdown of Vortex Trend Shift. We covered how the Vortex Indicator measures upward and downward pressure, how the triple gate of crossover, strength, and trend filter works together, how the code opens both long and short positions, and how the average true range bracket and the early exit manage risk. Remember, everything in this video is educational information only, and nothing here is financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.